Well, what the Fed does or doesn't do is always big news. To talk more about this latest decision on interest rates and what it's going to mean for the U.S. economy moving forward, let's bring in Thomas Hayes. Thomas is, of course, the founder and chairman and managing member of Great Hill Capital, LLC, a long-short equity manager based in New York City. Thomas, always a pleasure. Great to have you back.
Thanks for having me, Sean.
Okay, let's dissect what Jerome Powell had to say. Really no surprise, as John Terry just told us, that there wasn't a drop in interest rates today. But your thoughts on the language that he used about a potential cut in September, saying it will be on the table. So do markets build in that they're expecting this cut? And then if it does or doesn't happen, what are we looking for the next 8 weeks?
Well, Sean, I think the market has already built it in. Fed funds futures had been pricing nearly 100% chance of the first cut in September. And what we saw in the month of July was that the great rotation in anticipation of that began in earnest. As a matter of fact, if you look at, as of this morning, you had tech and communication services for the month of July were nearly flat, were a little bit negative, might have closed barely positive, but banks were up 16% on the month. Real estate was up 6.9%. Utilities was up 5%. Equal weighted S&P was up 5%, whereas the cap weighted, the normal S&P 500 was only up about 1%, maybe a little bit more at the close. And then small caps were up 10%. So the market has already started to get ahead of this. And the language, as you stated, Sean, did in fact change to be more predictive that he is moving ahead. As a matter of fact, there were a few Fed members he alluded to that wanted to go in July.
Wow. Okay, so to talk more about what happened, what areas of the economy is the U.S. winning the fight against inflation in? Because that obviously is going to be first, second, third, fourth, fifth on the list, leading them to make that decision one way or the other.
Well, we're seeing disinflation. So we saw McDonald's, for example, had sales down 1%. The big two things that have been holding up inflation were auto insurance and auto prices, which have started to come down, and owner's equivalent rent, which has been on a lagged basis, which has also started to show some signs of weakness. Wages grew at just 0.8% in the second quarter. So that was the softest since 2020. So everything is showing signs of disinflation, but he did emphasize the dual mandate, and he started to make the case again that he was focusing just as much on inflation as now he is focused on employment. He doesn't want to see material cracks in or weakening in the labor market, which he's focused on like a hawk, which, just a month or 2 months ago, he was only focused on inflation. So this is a key turning point, and he's seeing what the market's seeing, and that is he's going to have to move pretty quickly, certainly in September. As a matter of fact, Citi was out today saying they start in September and they go all the way down to 3.5%, which would be, 4 or 5 consecutive cuts in a row.
Wow, that'd be interesting. Now, also, we've heard the Fed talk about it's important to not act too soon, but you certainly don't want to act too late, which is what you're talking about right now. So if the economy is moving closer to its 2% inflation target, but there's still no question that consumers are feeling the bite. You talked about some, but people still grousing, obviously, about grocery prices, housing. Talk about some of the problem areas and the frustration that people deal with day in and day out.
Yeah, there's no question. I mean, the real issue is incomes have actually risen slightly faster than overall inflation, but it hurts people at the lower end because inflation is taxation without representation is basically what it comes down to. It hits everyone, and it hits people with the lowest discretionary income the hardest, people that have to pay for regular necessities, food, gasoline, et cetera, on a daily basis, rent on a daily basis. And those prices, unfortunately, are not going back to pre-pandemic levels. The best we can hope for is that they go down to increasing by 2% a year, which is the goal. But the Fed has indicated they have to move before that target is hit. Otherwise, you run the risk of deflation. And, the key thing here is it's binary. If they move too quickly, they have a quick tool to bring it back in. They can start hiking again. But if they move too slowly and disinflation turns into deflation, that can be extremely costly and hurt a lot of people. The saying is most people would rather pay an extra $1 for a gallon of milk and still have a job than have no job. And he's focused on that right now. And that's what's causing him to move in September.
Yeah, quickly, those with retirement accounts, they've had a pretty good year. Market's doing well. Now, if there's a cut in September and another at the end of the year, tell us what you believe is going to happen to the markets. And if that doesn't happen, what's going to happen to the markets?
Well, I think you shouldn't think about a retirement account in a quarterly basis. You should think of it in years. However, it would be natural to see some short-term volatility ahead of the election, which is, late September, early October, and that just happens to line up with the Fed meeting on the 17th, 18th. So coincident or causal, it wouldn't surprise me if we see some continued strength over the next few weeks, and then some fall volatility along the lines of the election and or the Fed meeting in September. It could be, and a lot of people are pointing to, it could be a short-term sell the news before a year-end rally. That would not, in fact, surprise me at all. But I wouldn't stay short too long, because I think after you get the certainty around the election, regardless of who is elected, you're going to see a rally into year-end as the market absorbs all the new news. So what we like to do over here at Great Hill Capital is buy high-quality companies when they're on sale and hold on to them for a while.
Excellent advice. Excellent advice. Thomas Hayes, always a pleasure. Thank you so much for your insight.
Thank you, Sean.